Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Friday, August 7th. Non-farm payrolls. Well, I thought it was going to be a little soft. The market was expecting 80. I thought 55. I thought unemployment would remain at 4.2. We got a shocker. Down 23. The economy lost 23,000 jobs last month. And not only that, the revision was sharply lower. In fact, the 2-month revision was down 100,000 jobs. Now, we had several months where the revision was higher. And higher revisions usually mean growth, but lower revisions generally suggest weakness. Now, interestingly, the unemployment rate actually fell 4.1% from 4.2. But the big story really is this big drop in payrolls. Now, let's dive into it a little bit. The big drop in payrolls, a lot of that was due to government payrolls falling 53,000. A lot of that state and city. Usually these are seasonally adjusted, so the summer months shouldn't matter, but that's a big drop in the market was looking for 10,000. That's a flip of 60,000. If it wasn't for this, we'd probably be around the 40,000 level. Manufacturing payrolls and private payrolls actually grew a bit, not as much as forecast, but certainly at least not a negative. And then the unemployment rate dropped because the participation rate dropped. So that means there are fewer people in the denominator, fewer people in the economy, in the workforce. So that's why it makes it easier for the unemployment rate to drop. The big story, of course, is non-farm payrolls. And now this is a huge miss, much lower revisions. Average hourly earnings, looking for 0.3%, was only down at 0.1%. So that drops it year on year to 3.2 from 3.5. Okay, let's look at the Bloomberg article. Non-farm payrolls decreased 23. That's 100,000 downward revision to the May and June figures. They indicate that labor force participation fell because, unemployment rate fell because of labor force participation's fall. Decline in jobs driven by government, leisure and hospitality, and retail trade. Local government employees shed nearly 60,000 jobs, almost entirely in education. So that may or may not reverse itself, but that number is still pretty heavy. And the FIFA World Cup didn't seem to give the positive boost to employment as some economists had hoped. Manufacturing construction payrolls continue to climb. At the end of the day, this is a very soft report and has direct implications for the Federal Reserve in September. But a couple more comments, and I really like Anna Wong. Bloomberg Economics says July job growth was subpar. Weak payrolls and higher layoffs are likely a stronger signal than the drop in the unemployment rate, which was due to the shrinking labor force. Coupled with our forecast of a soft CPI print next week, we expect the Fed to stay on hold in September. There's another analyst who says, this does not look credible to me. The numbers don't jibe with what we're seeing more broadly for the labor market. Stephen Stanley, chief economist at Santander. If the labor market had weakened as much as the June and July jobs report suggests, we'd be hearing it from Fed officials in the economy, and we're not. So we'll have this. We'll continue to monitor ADP, but it'll be a month before we get the next employment report. Okay, what does this mean for the Fed? This is today, this is yesterday, this is 1 week. This is the probability that the Fed doesn't hike in September. A week ago, it was only a 33% chance priced by Fed funds futures. Yesterday, it was up to 45% chance. And now, majority, 56%, believe that the Fed will not hike. So again, from the hike, so the percentage change on the week that the Fed will hike fell from 67 to 44, and for September meeting, and for the December meeting, it fell from 88 to 77%. Both of the numbers are still too high, and it's about stubborn bond vigilantes who say, well, inflation's higher than target, and we have to hike. But the economy is not that strong. Jobs are not that strong. Inflation may be driven by oil. Why are you trying to hike in a situation where the hike won't bring down the price of oil? What are you trying? What kind of result are you trying to add here? So I think this is still too high. Okay, this is important for crypto. Barron's reports that Senate delays Clarity Act vote. Crypto's priority is now a Hail Mary. And a Hail Mary is, basically in American football, it's like you almost have no chance. You take one long throw at the end of the game, and we call that a Hail Mary pass. You're just basically hoping. So the crypto industry suffered a significant blow after the Senate delayed a vote on the Clarity Act until after the August recess. And that's the industry's number one priority, because once you have clear regulation that makes expansion and planning for the future much more easy. The majority leader said, confirmed it late yesterday that there won't be a vote before the August recess. Both sides are at odds over the bill, which include putting most crypto trading with the CFTC and not the SEC. The Biden SEC, freedom from being scrutinized by Wall Street sheriff, has been a goal for Coinbase Global and other crypto firms, which faced a crackdown under President Joe Biden's SEC. My only point is be careful what you wish for, because the CFTC can be pretty brutal as well. If people remember, Obama's CFTC, the guy who was running that was really, really tough on the markets. Now, there is a chance that the Senate could vote in the bill in September, but right now, you need 60 votes because of the filibuster to get this to a vote, and that means 7 Democrats. And the Democrats won because they all hate Trump, and they don't really run on anything than how much we hate Trump. They said we want restrictions on President Donald Trump's crypto dealings, which has certain concerns because U.S. laws shouldn't target specific people, and this is really a specific person or persons being targeted. Some GOP lawmakers also want stronger restrictions on the ability of crypto companies to pay yield on deposits. And banks like JP Morgan really don't want that because, and as well as community banks, because higher yielding, because they have crypto companies have a lot less crypto coins, or companies have a lot less overhead, they can afford to pay a higher yield than regular banks, and they're afraid of getting their deposits drawn down, which would certainly happen. So they have a pretty strong lobby. In the most optimistic case, senators reach a deal, and then there's a 3-week period when the Senate is in session in September, and they can vote on it. After that, it's all about election. So my guess, maybe a 35% chance that it passes this year. One thing to note is the crypto folks have a huge amount of money ready to go in the elections. And I think the Republicans are hoping that they will spend it, because certainly a Clarity Act that's market friendly and crypto friendly is more likely with a Republican controlled Congress, certainly Republican controlled Senate, than a democratically controlled House and Senate. Okay, Telegraph, this is an interesting piece. Russia could attack NATO within weeks, U.S. intelligence warns. Now, this is a little clickbaity. Russia is always pushing the envelope, sort of sometimes a little bit like North Korea and South Korea, right? And NATO doesn't really want to respond. They will yell and scream, but they won't really respond. So the U.S. intelligence said Russia could attack a NATO country within weeks to see how the alliance reacts. They could do a small land incursion or launch cyber attacks across Eastern Europe. What they did yesterday, I think they found 2 bomb drones or drone bombs at a German Air Force base. So that's a big deal near Ukrainian planes. So in many cases, this would be an act of war. Obviously, Europe doesn't want to start a war with Russia, but Russia is showing how much can we push you? Will the Americans support you? What if we attack the Baltics? Or in this case, Poland. I don't think they would choose Poland. Poland's pretty big and pretty powerful and will probably push back. But the Baltics, like Lithuania, on Thursday, the Lithuanian defense minister warned that the Kremlin was planning to use Ukrainian-made drones to attack the Baltics, to say the Ukrainians are hitting us, though nobody will believe that. So it's really about trying to divide Europe. They had live fire exercises, a Russian ship only 45 miles away from, in the English Channel, away from the Great Britain. So the possible threats range from a cyber attack or sending unmarked groups to occupy territory to a limited incursion on the alliance's eastern flank. Now, the likelihood of an incursion is probably pretty low, but as time goes by, and if they get desperate, they'll say, look, can we split the alliance? You want our troops out? Well, you make Ukraine give us something that we want, sort of a little bit of blackmail. Now, the Europeans, I believe, will not really react strongly. They'll write a strongly worded letter because that's, at the end of the day, all they really know how to do. Okay, let's look at some of the markets. Brent, unchanged on the day. I'm a little surprised. I thought Brent would be higher. I mean, we had a big move yesterday up, but this deal looks terrible. It's essentially where the deal is going to say U.S. and Israeli troops cannot pass through the Strait of Hormuz, and other hostile nations would have to pay something. Yeah, but certainly U.S. doesn't sail many U.S. flagged ships through it. But I can't imagine that the president would allow this, even though he's not saying anything, saying talks are moving forward. I'm surprised we're not getting a bigger bounce. I don't know. I don't think I like this deal at all. I'm not sure it'll go through. Gasoline up 1.4%, diesel up 0.6%, a little bit of a bounce from the lows. Fuel prices at the pump continue to go down 2 cents from yesterday, now about 6 cents from the high. Now remember, WTI is a lot lower than than the highs that where it got to. So this should continue to drift lower. I'm figuring under $4 next week, even if really nothing happens. Okay, look at the markets. Look at bonds for sure. The front end is rallying, yields are down lower because the soft payrolls number makes a rate hike less likely, but you're getting almost no change. This is a steepening, what we call a steepening, when the market goes like this. Yields go down here and the back end doesn't really change very much. It only goes down a little because lower front end rates make higher inflation later more likely. So this is expected. I thought we would get a bigger move here, to be honest, but and stocks are up, but only 0.5%. I wonder if this is going to give back a little bit of this towards the close of the day. We'll look at a chart in a second, but I'm a little disappointed in how much stocks have moved. Gold and silver higher, but silver particularly, a lot of profit taking here. The chart looks good, but $2 from the highs. Oil is only marginally higher. I think it ought to be a little bit more higher. And crypto is mixed. It looks like I think the market had priced in the Clarity Act was probably not going to get through before the recess. So not a huge surprise here, but the outlook overall is not as good as it was before. Okay, I want to look at SpaceX. Up, I think 6 or 7% today, 4% yesterday. That's 11% in 2 days after the big talk about the stock lockup expired. There's going to be potentially a lot of selling. Looks like fully priced into the market, or people were already short, or a lot of people decided, well, you know what, I'm not selling here below the IPO. So we're trading just around a little under 130. Remember, the IPO was 135, opened at 150. NASDAQ kind of consolidating here, not doing a lot. So this is what I'm a little disappointed about. Tech is okay. Generally, you can see that from here. Tech is up about a little less than 1%. It's holding the index up. But the reaction, I have to say, was a little disappointing. I mean, this is if you're the stock market and you're afraid of a Fed rate hike, this really takes it off the table, I think, in September, and I think it makes it much less likely the rest of the year. So yes, we've had a huge run where we are basically in the RSIs. I think we could see a little bit of a correction next week. Gold, aiming for the 100-day moving average, though at right around here, just below 4,400 is where we failed in this pop in June. Let's see what we do here, but the market seems to be fairly bullish gold, at least in the short term. Silver, also through the 50-day moving average, but it's up 3%, but $2 off highs. I think we're seeing some profit taking here. Generally, you would like an aggressive move in silver to accompany gold. Okay, so next week we get CPI. The earnings season is basically over. Have a good weekend.